Monster Beverage. First thing, what is our expected move here, guys? Stock's 58 and a quarter-ish. Okay, 374, 380. I'm right there. Okay, I'm on board with that. So let's get this up on the board here. MNST discussion. Stock is 58 and a quarter. Expected move is about 375. So that puts us at an expected range of about 54 and a half up to 62. Now let's take a look here at the charts. 54 and a half and 62. What do we see? Well, there's obviously some really good support at the 50-day moving average there, which is literally right at 54 and a half. $62, well, there is definitely some big resistance there. Yep, I agree, Rick. Right there. I agree with you. So there is really good support and resistance at these levels. So if I didn't like one direction or the other, playing off of those areas, the expected range, which coincides with the support and resistance, we'd probably look to do an iron condor, a strangle swap, something like that. But from what I see on the charts here, and from what I've been reading fundamentally here, I'm actually pretty bullish in Monster. They had a lot of nice upgrades, earnings guidance, big cost revisions. So I like the upside here. So what I am looking at here, guys, is the combination. We talk about, what's better, the vertical or the calendar. Well, I'm looking at a combination of that, which is called a diagonal. Calendar spread, but skewing our strikes. So what I have set up on the screen here is selling the 62 strike call this week, which is right at that expected move. Okay. What I have against that is buying a call out 2 weeks further, March 15th, so a calendar spread, but a lower strike, the 61 strike, to give us some added upside impetus, to give us a little pop to the upside here. So anything to the upside here, in addition to being able to take advantage of the big volatility discrepancy, we also will have some extra delta, which you can see here. The delta is about a positive 11. And unlike in the straight calendar, like what we reviewed this morning in Palo Alto, where the stock just soared and actually went beyond our strike and we started to get short some delta, because we're long the strike skew, meaning we're long the lower strike call, the 61 versus short the 62, we would never be short delta. Our delta could get shorter, but it would never go negative, as you can see here. And so I like that to the upside. Can everybody else hear okay? Okay, so this is one of those scenarios where a call calendar would work just great. But because I really like the extra delta, the extra impetus, it is going to cost a little bit more, right? It'll cost us more, but it gives us more upside exposure. Any questions on this? Well, Michael, if it does, that's a good thing for us because of the skew in the strikes, right? Let's say the thing goes to 100. Exactly, Paul. Exactly. Let's say the thing goes to 100. All the premium comes out of both options, but we're long a vertical, right? It's the vertical part of the call spread, the 61, 62, which gives us that extra delta, gives us that extra protection to the upside. Does that make sense? Well, you got it right up here on the screen, Paul. Right now, probably no more than 45 cents. Let's see what this is. Maybe 50 cents. I probably put out a 45-cent bid right now. You know, we have the rest of the day here. I would bet that we could easily get filled at 50. But for right now, 45 is really what I'd be looking at. See if we can get in there and, you know, let the market come to us. Okay? Paul, we'd be looking, you know, probably to get out around $1, 85 cents, somewhere around that area there. Doesn't need to break out. We don't need it to go above that area. Again, look at the risk chart here. Okay, here's the profitability here. So, we don't need it to get all the way. Obviously, we want it to go as high as possible because we have that vertical part. Okay. All right, guys. Let me get this populated, the video. I'll get it up in the room. Get the signal out. And I'll be right back. Paul, why would I need a stop? Or, I mean, if it breaks through that, this thing's going to max out at $1, theoretically. If this thing breaks through it, it's going to max out at $1. So, okay, maxes out at $1. All right, guys, I'll be right back. Kristen, Hosi, make sure you get involved here. Ask some questions on what's going on, all right?